In today's video, I'm going to do a brief follow-up on last week's special edition video on risk reward and hedging your positions. I also want to take a look at how to double dip a trade opportunity, meaning how to take the same opportunity and, well, trade it twice. So all that and more on this week's edition of the Weekend Review. All right, traders, welcome to the Weekend Review. Once again, my name is Akil Stokes. I am the head currency trader and trading coach at Trade Empowered, and thank you so much for visiting and viewing my video once again. Just a brief review of my week. It was a pretty good trading week for me, and that's despite making a few mistakes. Yes, you heard it correct. I had a pretty bad week as far as mistake-wise, and was unlucky as well. I know there were a few trades. I talked about it on my blog. I had one trade where I accidentally forgot to set targets. That trade would have been a winner. I ended up getting out for break even. I had another trade where I set my orders to be canceled at the end of the day by accident, and well, the trade finished at night and I didn't get filled, missed about 50 pips there. And then I had a few trades that were just unlucky, a few trades that just spiked through my entry, but the spread didn't get me filled. So it was a rough week. Again, the first two are my fault. That's completely on me. I rarely make mistakes, but I am human, and it just happened. I made two of them this very week. The other two, well, we call that trading. Now, sometimes it just happens. Long story short, I left a lot of pips on the board, but was still able, to this point at least, we still have 1 day left, still able to pull out a profitable week. And most of that comes by patience. We had a flood of trades today in the live room. Remember, the first 5 pairs we did our analysis on, we had 5 trade entries. A few of them won, a few of them got stopped out, a few of them came very, very close to getting stopped out, and then came back in the afternoon to win, just to reward traders for their patience. I actually recorded today's entire trading session. I'm not going to have time to show you that entire thing. It's too long. We go 3 hours a day. But hopefully I will get the chance to show you some bits and pieces of it. But in today's video, I want to do 2 things. I first wanted to start off by showing you a trade on pound yen that we took, and I actually took it twice. Now, on Wednesday night, I put out a video for syndicate members. This is a little bit embarrassing. I put out a video for syndicate members on a New Zealand dollar trade. I broke it down from the daily chart all the way down to the hourly, told the traders this is why I'm going short, and then probably by the time the video got produced and emailed out to those members, the trade had busted out to the upside. I remember looking at my phone late at night. I was watching a movie with the wife and reviewing my trades, and I said, why is New Zealand, why is Kiwi not showing up? Rushed back to my computer and stopped out. The funny story is, about 5 minutes after recording that initial video, I realized I forgot to record a video for pound yen. And I never actually mailed that out to syndicate members, again, because I had a movie date night with my wife. And that was a trade that ended up winning. So I'm going to show you the recorded session, the secret recorded video that never came out for that trade. And then I'm going to go straight into a recorded session from our live room today, where I actually took the trade again and made profit again. So double dipping on that same trade. So check it out. Hey traders, Akil Stokes here. Just recorded a syndicate video talking about the short entry I took on New Zealand dollar, and realized that I forgot to mention the one I took on pound yen as well. I probably won't end up putting this out to you guys. Maybe I'll throw it in a weekend review. But I've got some time on my hand waiting for the wife to get home, so why not record another video? And it features the same type of analysis. Again, I do this once in the morning and once at night. I do what's called my top-down analysis, where I go from the higher time frame, which for me is the daily. I get a bird's eye view of what's going on there, and then I work my way down to more of my trading time frames, which is my 4-hour chart and my 60-minute chart for entries. And Buffalo Wild Wings, don't mind this. This was actually a very good move, by the way. But that's not what we're here to talk about. We're here to talk about pound yen and what recently happened with pound yen. Now, pound yen, just looking up, looking at the big picture, you can see we've been in this consolidation. We've been in this wedge, channel, pennant, whatever you want to call it. We've been in this consolidation area, and we've slowly been picking off high after high after high. So we've come to this high, we've put in a higher high, higher close. We've come to this high, putting a higher high, higher close. We've even gotten a higher high, higher close, I believe, maybe just slightly above this level. Now, just like any pennant or wedge, there's going to be a breakout one way or the other. I don't know which way it's going to be. My guess right now would be to the upside, just based on the series of higher lows we've been putting in, but you never know. What I do know is that if, and here goes the if-then thought process, if we're going to continue up, we're likely to come test where? Well, our next structure level. This is the only one left, unless I go out to the weekly and find something from a few years ago. But this is the only structure level left, so we're likely to get up to this level. So when I see a higher high, higher close, new structure high, I predict, or that tells me that, hey, we should see a trend continuation to that side. How do I, the next question I ask myself is, how do we expect to get there? Well, there's two ways. We're either going to go straight there, or we're going to come back and retest something. And retest something, as my technical term, is what we're doing right now. And if I drag this line, the skinny line, right back down here to where price action is at, as always, look left, structure leaves clues. What do we have? Well, look at this. We've essentially have the highest closes, highest closes, highest closes of a big zone of candles, big zone of resistance turn to support. So I'll take that theory from the higher time frame, and then I'll use that and go down to my trading time frame and see if there's a reason I can get involved. And we actually broke this down in the live room a couple days ago, but I'm going to do it again. Don't mind this little pattern here. That's the Constellation software doing its work, giving me a heads up that there's a potential cipher up there that could help with potential targets, because I don't want to fight off a cipher pattern. I know that. But again, looking back at the structure level on our daily, I'm not going to zoom all the way out here on the 60, but this level right here, our previous structure lows, is coming in at that same level. Again, market created new structure high. We come back, test, rally, test, rally. Look at these long wicks, test. And now we're back to test that level. So right away, this looks like a good opportunity to get long. And then we go about using our CTS score to add build a case for entry. And what do we have? We've got ABCD pattern right there. We've got Fibonacci extension, should be a 1414 if I remember correctly. Extension there. If we want to take our Fibonacci tool and invert it from the C leg back to the B leg, we're going to have a 1618 inversion. And now we're starting to build a case, but we're starting to put our points together for ABCD patterns, whatever points you have for that. Adding that with Fibonacci confluence, adding that with structure, and of course, higher time frame confirmation, because we did that top-down analysis. So. And then as the market comes down to that level, that kill zone, that potential reversal zone, however you want to call it, you just look for your reason for entry. And, there's tons of ways. There's double bottoms. You can look for, you can even just look at the wicks of these candles. Look at these wicks. Every time they're spiking down, these long wicks getting rejected. Higher high, higher close right here. But the key is, or the point that I wanted to bring to you guys was just going through that top-down analysis, getting what I like to call a confirmation bias. And I mean that in a positive way. There's a negative confirmation bias as well. But getting a confirmation bias and then using the skills, using the tools that we teach you guys to act upon that bias and potentially make profit. So we'll see how this turns out. For you structure-based traders, Mulder, did you get long? This is a great sign. Again, what did I say? A close above this level. The market probed it one more time. A close above this level is a great sign. Structure-based traders, this is an at-market long entry. If I didn't have that cipher already on the table, I would get long at market. In fact, I'm going to do this. I am going to get long at market my other account. What is this, pound yen? 60 minute. And then we'll get back to the other pair. There's so much action today. There's so much action. It's crazy. All right, 60-minute pound yen. Let me do, bang, 20,000, 10,000, 10,000, 10,000, 10,000. So if you're a structure-based trader, it's an aggressive opportunity. RSI is not oversold, and we've already had to move. But if you're looking for another aggressive opportunity, this is it. But again, aggressive opportunity. More conservative trader, wait for that RSI to go oversold. Wait for a double bottom, something of that nature. You can do the breakdown of the higher time frame as well, but structure at that level as well. So I ended up buying them up last night, right around here, about 72.87, I think it was. Actually, last night would have been what, over here? Somewhere around that area, 72.80s, I think it was, and we spiked up the structure. And what we did was we came down and essentially got a second chance. What I liked about this trade was that, or about this area, I mean, I already liked the area for obvious reasons, but the fact that we cannot create a lower low, lower close. And just looking at these candles, you know, I always say, make a story of the candles. I think of it like a fight, like a civil war or any type of war. Obviously, it's not a real war. You want to be sensitive to that type of stuff with what's going on in the world. But think about it as like offense versus defense. The Bears are on offense. They try to make a move forward. Defensive line pushes them back. You know, offense, they try to move the ball forward. Defensive line pushes them back. They keep trying to move, keep getting pushed back. Eventually, that defense is going to gain momentum. We came up, defense gained momentum. Offense made one more strike. Boom, defense held that line again. You can get some clues in the market from activity like that. So with a second test of it, just took another opportunity to get long again and maybe make some more profit out of it. Right now it's up 14, so we'll see. All right, how cool is that? Again, same trading opportunity, just two different chances to get involved and double the profit. Now, it won't happen like that all the time. In many trades, especially pattern trades, if the pattern has already completed, if it's already rolled up to the level that our targets are at, I will not take it again. This is something only on structured trades, only if I read and analyze price action and the market is telling me that, hey, there is money on the table, Akil. You better grab it before someone else does. And please believe there's someone else out there that will. Next, I kind of want to follow up on last week's video, the special edition video I did on risk reward and hedging. I got an overwhelmingly good response. However, there's always once in a while a few negative responses in there. And one that I took personal offense to was a trader, and I know this trader for a while, but a trader saying, well, you know, I handpicked that example, and it's basically I got lucky. And, you know, we do get lucky on trades. This wasn't an opportunity where you get lucky. This is skill. This is a strategy, setting it up to it works in your favor. For me, getting lucky is when the price action shows you that you're wrong and it comes this close to getting you stopped out and then reverses right away. That's getting lucky. Getting unlucky is the complete opposite of that. I had a trade on Aussie dollar this week where price action came a single pip, no lie, a single pip to my target, and then went back up to shoot me out for about a 20 pip loss. That's unlucky. But the hedging thing and setting up your risk reward and trading that risk reward on a consistent basis, that isn't luck. It's skill, and it's being able to put yourself in the right positions in the market. And today in the live room, we had a similar opportunity as we took two separate patterns. We took one short on pound dollar and one long on euro dollar. And well, I'll let you guys see how it turned out. But the hedging technique isn't luck. It's a skill. It's a strategy. And if you're knowledgeable about risk reward, it makes perfect sense. I'm thinking you guys are starting to see that. You know, again, taking these two opportunities, right? Pound dollar. Target one was what? 26 pips, right? We made 26. Let's call it 25. Let's get the printing thing off here. Get over here. There we go. Learn how to use a computer, Akil. We were in two positions going in, right? We were in a short position on pound dollar. So we were buying the US dollar and selling the pound. We were also at the same time in a long position in euro dollar. So we were selling the dollar and buying the euro. So selling the dollar on one pair, buying the dollar on the other pair, taking opposite positions, right? What I've noticed most of the time when this happens is that the majority of the time, one wins and one loses. Some of the time, one will win, the other one will get stopped out for break even. I mean, it'll hit a point that allows you to take your stops out at break even. Very rarely, both will win. Very rarely, both will lose. So if you're doing this type of stuff and you're thinking that you're going to win both, you've probably got the wrong mindset. But for those who are knowledgeable about risk reward, again, what did we just see here? Our maximum stop here was about 15 pips, right? If we were to get stopped out, we would be down 15 pips. So one loss minus 15 pips. We just banked 26 on pound dollar. One win, 26 pips, right? Add that together, what is it? 2 trades and you're up money. Is that a bad thing, guys? To go 1 for 1 and still have profit? Still have 11 pips in the bag for the day? Yes or no? And I'm not telling you guys to purposely find these positions. I'm not telling you guys to, hey, every time you take a long opportunity on pound dollar, go take a short on euro dollar. That would be dumb. But if the markets offer you opportunities on both, and these are opportunities that meet your plan, you know, we had advanced patterns on both of them. We had a bat on euro. We had I think a bat here on pound as well. If the market offers you opportunities and you happen to get into both trades at the same time, don't be scared of doing that. Don't be that trader that says, oh, well, I'm already short pound dollar, so I'm going to pass on this euro dollar long opportunity because of confluence and blah, blah, blah. Don't be that person. Take both. Trust your risk reward. We talk about risk reward a lot. If your risk reward is consistently, it doesn't have to be every trade, but consistently beyond that 1-to-1 mark, then one winner and one loser shouldn't bother you. Because at minimum, you should break even. And that's okay. Nothing wrong. You're not losing money. So I'm glad we got to see a good example of that today. Maybe that trader will believe that it's not lucky now. Maybe he won't. It doesn't really matter. It doesn't affect my trading, but. All right, guys. Well, thank you once again for joining me for a weekend review video. As always, if you like what you saw, if you think you gained something out of it, do a few things for me. Leave me a comment. Hit that like button. If you're new, hit the subscribe button so you can get this video each and every week and be the first to find out when it comes out. I'm thinking of recording more of our day trading sessions, and if we get something juicy, piecing that in. So be on the lookout. Be on the lookout on a regular basis. Usually this weekend review video comes out every Thursday. I may randomly start putting videos out Monday, Tuesday, who knows. We'll see how things go. We'll see how my computer holds up with producing all this stuff. Puts quite a strain on it. But as always, guys, syndicate members, I will see you on the trade floor tomorrow. I'll shoot you a video tonight if anything comes up on my radar. Live room members, we've got one more day left in the week. A very exciting, busy week thus far. And 12-week transformation members, well, you've got the best of both worlds. You've got the live room, you've got the syndicate, and we've got some more training on Monday. So until next time, gang, plan your trade, trade your plan. I'm holding up my number ones. Go America, and I will see you guys next week. Take care.